Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to reintroduce Mr. Darren Sinden, markets commentator for Admiral Markets. Darren, how the devil are you, sir?
Very well. And it's a lovely day, 200th anniversary of Waterloo, and the City of London filled with celebrations of that famous event.
And a very bad day for us hay fever sufferers.
Indeed.
In terms of the markets this week, all about the FOMC and indeed Greece. Any sort of observations on either of those?
For the FOMC, despite what a lot of the media headlines suggest, I honestly do believe that we're looking, further into the back end of 2015, and I also would push that to say that more people are coming around to my way of thinking that it's not going to be till 2016, and that if you look at the way that certain of the currency pairs have performed, particularly anything to do with cable, or rather I should say sterling, that the UK is perhaps in the the front runner for the earliest rate rise once more. That can obviously change, but that's certainly the take that I would put on it. As to Greece, well, I'm confounded really. I think Greece is going to go to the wire. I still hope that will be some sort of a deal, or failing that, the next best outcome, an orderly exit. But all the signs are it will be anything but that. But we will have to tough it out for now. Understood.
Okay, well, let's go to our first slide. Let's look at the data released over the European session.
Okay, so quite a rich morning for data, really. So we'll start with UK retail sales for May. The month-on-month figure came in at 0.2% versus a forecast of 0.1%, so slightly better there, but only marginally. In terms of the year-on-year numbers, however, we got a read of 4.4% growth. That was against analyst estimates of 4.6%, so somewhat disappointing there, perhaps, that we haven't seen retail sales continue to pick up, although obviously few more weeks of good weather like we've got today, and that could easily be redressed.
Yep.
It was also today the day for targeted LTRO, one of the long-term refinancing operations that the ECB has been involved in, where it makes money available to banks to borrow against eligible collateral. There was a take-up of around 73.8 billion euros today by participating banks. That's about 20% higher than the expected forecast of around 60 billion, and nicely in the middle between that figure and the previous read of 97.8 billion. You could infer from that banks want to lend more money, by taking this LTRO money. However, you could also take the view that they're stocking up on a bit of ready liquidity ahead of a possible denouement in Greece on the 30th of June. So take your pick out of that. And then we had Eurozone wage growth data as part of the wider Eurozone total labour costs. Wage growth year on year, this is a Q1 number I should say, but year over year, we're up, wage growth was up 2.2% above the same period in 2014. Interesting to note that was 2 times the gains we saw in the third quarter of 2014. So wages are picking up both here and in the Eurozone. Eurozone wage growth is a component, as I've suggested, of the total labour costs in the Eurozone. Again, that number for Q1 was out. Coincidentally, perhaps, it came in at 2.2% growth already. What's worrying here, as we've discussed before on the show, is whilst it might be beneficial to see some inflation creeping back into the Eurozone, European wage or total labour costs are already very high in comparison to other parts of the world. So it doesn't bode well for competitiveness going forward, even if it is perhaps a sign that the economy is coming back to life. And then the Eurogroup's meeting in Brussels, we haven't heard anything out of there, really. A few sound bites from 1 or 2 of the leaders, but nothing concrete. And obviously the top item on their agenda will be Greece.
Okay, so let's take a look at the movers in Europe this morning.
Okay, well, we start with what was once known as Scandinavian Airline Systems, now just shortened to SAS. The ticker is SAS, and it's a Swedish stock. They're up 5.44%. And rarely for an airline in the current climate, they've turned a profit in Q2 of around 278 Swedish krona and raised their guidance going forward. What I thought was interesting is that they did that in spite of, or despite, selling some slots at Heathrow. So it shows you can make money without necessarily being involved at Heathrow. The flip side to the airline industry, really, today, Airbus Group, obviously it's been the Paris Air Show for the whole week. Well, they're down around 1.5%. In fact, I think they've eased, perhaps down to about 1.7% in the morning. 3-month lows And the reason for that is they got less orders from the Paris Air Show than people were expecting, even though I understand they've announced a couple more this morning. They've also been a victim of euro strength that followed on from the FOMC last night. And if we're talking about stocks and sectors that have moved on the back of currencies, then the FTSE 350 mining sector is a perfect example of this. Ticker NMX 1770. They're up 2.5% as a group, and quite simply, the miners are rising on a weaker dollar. There's that inverse relationship between dollar strength and commodity prices. So a weaker dollar means better commodity prices, means a bounce for the mining sector, and that's what we've seen this morning.
Understood. Okay, so let's turn our attention to M&A rumours and movers this morning.
Okay, well, we're back in the chip sector again. Can't seem to leave this alone.
Yeah, it's hot.
It absolutely is. This time we're looking at Applied Microcircuits, not to be confused with Applied Micro Devices. This is AMCC ticker in the US. They're up 13% yesterday, and the reason for that, quite simply, an M&A magazine called The Deal had speculation that the recent appointment of a hedge fund manager, a guy called Chris Zepf, could open the door to offers from larger rivals. He runs a hedge fund called Kingdom Ridge. They own about 9.9% of AMCC. For anyone that's not familiar with the company, they design and make chips and components for things like data centers, service providers, and some of these chips and components are designed based on designs from ARM cores as they're known. So probably worth keeping an eye on ARM, which is ARMLN, or in the US ARMH. There's any deal for Applied Microcircuits presumably be beneficial to ARM. In terms of who might be interested, well, Qualcomm or Marvel Technology have been seen as the most likely acquirers, and the article speculated that the company could go in a deal that's worth up to about $1 billion. If we sort of work that back as to what that might mean for a takeout price, be around $12, so a significant premium to yesterday's close. Just to put that into context, the 52-week range has been 461 to 1148, and I think I'm right saying they closed around 760 yesterday. So,
okay, so some decent potential in terms of premium.
Absolutely.
Okay, let's take a look at the US data points to keep an eye on today.
Okay, well, it's a Thursday, so it's weekly jobless claims. Forecast for today's number is of 275,000 versus the prior reading of 279,000. Just to put that in context, the overall trend for weekly jobless claims is lower, and we're coming off of a high of around 350,000 that we posted in October 2013. The other data points to look at today, the CPI for May, this is the month-on-month figure, and we're looking here at a forecast of a rise of 0.5% versus the prior 0.15%. But it's a mixed picture as far as inflation data is concerned in 2015. No clear or solid trend at the moment there. And then one of these regional Fed surveys, the one that looks at manufacturing and industrial production, the Philly Fed Business Outlook Survey. Here we're looking for a read of around 8 points versus a prior 6.7. However, we just want to put that in context. We spiked up to and then fell off sharply from reads near a 40 in November 2014. And even prior to that point, we were reading above 20, so we're really struggling to get back to those heights at the moment. Understood.
Okay, and let's wrap up with the US pre-market movers and some chart points.
Okay, well, we stay in tech and software initially for the first of the pre-market movers. Oracle Corp, ORCL, US, the ticker there, down around 6.3%. They had earnings late last night. Earnings disappointed, and the thing here is that they're transitioning from being a pure software provider to offering cloud services, and that's turning out to be quite a painful transition.
Right.
IBM went through similar growing pains in the late 90s. It worked out well for them, and I imagine Oracle will be hoping that they could do something similar. And then the other mover I've looked at is Jabil Circuit, JBL US. They're down almost 7.5%. They posted weak Q3 revenues. They're on a slightly different earnings cycle to most other US companies. Worse than that, though, they offered downbeat guidance going forwards. And for anyone who's in any doubt what they do, they're a specialist electronics manufacturer. So, as I say, down 7.5%, albeit. Equity markets probably a little bit more stable today, particularly the FTSE, probably helped out by the miners as much as anything else. So in terms of our downside level in FTSE, we're now looking at 66.50. For the upside, we've gone for 67.10. The DAX has been a bit more volatile, as is often the case, but 10,805 now on the downside and 10,960 the level to look for the upside. I love to tighten these ranges up, but it's just so volatile, it's very difficult to do that. The S&P 2082 on the downside now, plays 2107 on the upside, and for the Dow 1770 versus 17975. Again, it'd be nice to have a tighter range, but you know, that's what the candle charts dictate. Currency wise, it's all about dollar weakness after the dovish Fed last night. So for euro dollar, we need to break back down through 113.30 on the downside. To the upside, 114.18. A move above there would be bullish. Aussie dollar, US dollar 77.50 now, our downside level, with 78.48 the new level to watch on the upside. Dollar yen has probably been one of the bigger movers, so we're talking now about well, 121.67, so 2 or 3 big figures lower as our downside level in dollar yen, with a move above 123.15, the must break level on the upside, and then cable going from strength to strength, 158.58 on the downside, and we need to see a move through 159.35 to the upside, but I think that could have already been taken out, and then we'd be looking at 160.00 and levels above there.
Well, I think that would be 8 winning sessions on the bounce. Okay, Darren Sinden, market commentator, Admiral Markets, thank you very much for your continued support. That wraps up the Wall Street Crossover Show. We'll be back at 1 o'clock tomorrow. Have a good day. Thank you.